Standard Bank has a 150-year history in South Africa and since 1990 has built operations in 18 countries elsewhere in Africa. It has a market cap of 187 billion rand, is 20% held by ICBC of China, trades on a price to earnings ratio of 11.4, a dividend yield of 3.5%, and notably has two CEOs because they couldn't make a decision on who should lead the group. Paul.
Yeah, look, that was an interesting move, but I think that's fine. That's probably the least of my worries. It's an interesting corporate track record, isn't it? Because certainly South Africa's largest, been around and has grown with the South African economy. Great story, great people, great capital base. In recent years, it looked like it was going global, and then it kind of got acquired by ICBC, at least in terms of that 20% stake. And it's now really ICBC's venture pony, so to speak, in Africa. I think it's done fabulous work in Africa.
Venture pony in Africa.
Yeah,
we can't let that one go.
Well, it's just become their stalking horse. In other words, their vehicle. So we can see basically ICBC buying its Argentinian business. We can see them pushing them to sell Russia and Turkey. They're basically shutting down the business in London, except to the extent that it feeds the Africa business. So really, this is what it's going to be, and I expect to see tighter links between it and Beijing in the years to come.
Singa, do you think that Beijing will ultimately absorb Standard Bank and it will be rebranded ICBC?
I don't think so. I think Standard Bank has got a strong culture in South Africa, and I believe they believe that they are an African bank. They would want to keep that. So Standard Bank, I don't think that ICBC wants to go that far at this stage. They want to remain the 20% shareholders so that they let Standard Bank, who understands the African market better, run the cause.
But Paul, you mentioned earlier they are pulling back on the global story other than their focus on the African continent, which means they are basically admitting to having made a mistake.
Well, I wouldn't put it that way. In 2008-09, when the British banks were on their knees, where the Europeans were just looking bad, when even the American giants were on their knees. So at that point, Standard Bank was like in the top 20 of market capitalized banks in the world. But I think their expertise, their differential edge is definitely in Africa. I don't think this is an era in which big global audacious kind of plans are really warranted. The big banks globally even are still really looking at rebuilding their balance sheets. So for the moment, it makes sense for them to stick to their knitting and to make sure that in each and every African country they're based in, that they're achieving adequate return on the capital they've got invested there.
Singa, do you believe that they're getting their African strategy right?
I think so. I think they're getting it right. They're not going for controlling stakes in Africa, they're going for partnerships, and that seems to be working well for them.
For a long time, they had first move advantage on the African continent. Do you believe that the other banks are fast playing catch up?
Not really at this stage. They still have the largest exposure in the African market compared to other banks in South Africa, and they've also moved towards the high growing areas of the country, of the continent.
Paul, last week, Peter Wharton-Hood leaving the group and heading off to Deutsche Bank. No surprise there. I think Bruce Whitfield it was Squawk with Bruce last week saying that you can't have three people leading the group.
Yeah, and as you know, at the top of the pyramid, the minute a choice gets made, some of the other senior guys really need to look at their alternatives, but definitely not a loss for Standard Bank particularly. I just think, as far as their strategy is concerned, they've, put licenses in place in countries like Angola, very exciting new market for them. They're starting to see the returns coming out of that. They used to have by far a preferred arrangement relative to Nedbank and FirstRand. I think the one to watch though is Barclays Africa, because clearly Barclays has been in these African countries for just as long, if not longer, than the Stanbic branches were right from the beginning.
And the ABSA-Barclays relationship could start to become a formidable one, you're saying, from a competition perspective.
Absolutely.
Singa, do you agree?
Yes, I agree. I think in the future they could have a shared services type of partnership as well in the African space. So
let's go to hot or not on Standard Bank in the current scenario, Paul.
Well, that's where it gets quite difficult because, they've been becalmed at this sort of 110, 120 Rand band for like 5 years, which just leads
going
me to...
nowhere slowly.
Exactly. So, I'm afraid I'm not really going to be tempted much by these banks. I just feel that you could get into them, you could experience good growth and reasonable dividends, but that ultimately, given all of the stuff they do, the trading, the treasuries, the opportunities for losses here, there and everywhere, banks definitely not my favorite. For me, unfortunately, not hot.
You don't have to be afraid. It's going to be absolutely fine. I give you my assurance on that front. Singa, hot or not on Standard Bank?
From a long-term perspective, I'm hot on Standard Bank. I think we will start to see earnings coming through once they've sold their European operations, which have not been doing quite well, which have diluted their earnings. So also on the African space, they have exposure in Nigeria and Kenya. Their subsidiaries have done very well there. Their Stanbics have recorded headline earnings of about 60% so far this year. So I think we'll start seeing earnings in Standard Bank in the near future, so I'm hot.